Editorial Test Series 18 October 2023 discuss the role and significance of farmer producer organization in India. FPO is a type of voluntary organization where the members are farmers which aims to increase participation of farmers in decision making and provides for sharing of benefits among them. Role of FPOs promote partnership and cooperative model of farming, provide organized structure to for producers, resource pooling, provide education and training, policy setting and decision making, collective farming. Significance of FPO efficient utilization of resources. Resource pooling can lead to better productivity in present scenario of declining average land holding size, that is 1.08 hectare. Create better employment opportunity with enhanced cooperation with corporate sector. It will make agriculture remunerative in nature. Better price realization. APOs help in increasing bargaining power of farmers producers for their product. It created scope for increased per capita income of farmers as tested by Ashok Dalwai Committee. Example case of better price gain in Maharashtra, Gujarat, Rajasthan, etc. Quality inputs at cheaper price to members farmers in form of agriculture loans, machinery, quality seeds. It also provides for standardization. Example role of FEOs in participatory guarantee scheme. Women empowerment. FEOs can lead to improved participation of women in agriculture and increase their say in decision making. Example Apni Saheli FPO in Rajasthan, Sahyog Women, Jivika Agro Producer Company in Bihar. However, FPOs are undergoing with several challenges in present context in structural and functional aspects that have been mentioned in the following chart. Challenges with FPOs: inadequate access to market and infrastructure, lack of awareness among farmers, inadequate policy support, low adoption of technology, lack of skill and personal management, low working capital. Steps taken by government to promote FPO: central sector scheme of formation of 10,000 FPO by 2023-24 and provisions of credit guarantee facility. Institutions like SFAC, NABARD, state governments are providing support for promotion of FPOs. One district, one product cluster by Ministry of Agriculture and Farmers Welfare to promote FPOs. Increasing digital literacy of farmers through Digital India program. Rise of agri stakes like Digital Agriculture Mission, Unified Farmer Service Platform. Small and marginal farmers constitute 86% of farmers in India. In such a scenario, FPOs holds immense significance to achieve product quality and increase productivity and production in long run. 1B, One Nation One Fertilizer. One Nation One Fertilizer scheme of PM Bharatiya Jan Urvarak Prayojana was launched by Ministry of Chemical and Fertilizer in 2022. Under the scheme, Single Bharat for fertilizer and logo has been introduced. Main provision of the scheme: it aim and marketing fertilizer in the country under Bharat brand names. All type of subsidized soil nutrients will also bear the single brand. Example DAP as Bharat DAP, NPK as Bharat NPK. It provides for standardized brand and design irrespective of manufacturing company, thereby creating a level playing field. Benefit of the One Nation One Fertilizer scheme: avoid confusion among farmers due to multiple brand names, reduce transport subsidy by subsidizing across country movements of fertilizer, which is estimated at 6,000 crore per year. It will help to curb black marketing of fertilizers, putting an end to the misconception that certain brands are better than others, lowering the cost of fertilizers and increase its availability. Issue with the scheme: deter manufacturers from doing innovation and introducing more effective products due to less opportunity of creating a distinct brand name. It will reduce manufacturers as more mere importer or contractor of fertilizer. No focus on reducing the import dependency of fertilizer. The intended long-term success of One Nation One Fertilizer requires a resilient supply chain and effective market mechanism with a strong regulatory framework, which is a matter of time and consistent effort of the government. 1C, Impact of liberalization, privatization, and globalization policy on Indian economy. Gulf crisis of 1990s impacted India on a very large scale and pushed India into a balance of payment crisis. It was in this context when India introduced LPG model of economic development based on the recommendation of IMF and World Bank. It can be discussed as follow: Indian economic reforms 1991, LPG, liberalizing economic policies by reducing policies regulations and relaxing the norms to make it more livable to private sector, scrapping licensing norms, privatization, decreasing the role of public sector in all kinds of commercial activities, handling over the management and ownership in private hands, globalization, opening up of Indian economy to the rest of the world in terms of goods, servicing, capital and investment. After 3 decades of economic reforms, India is not only the fifth largest economy in the world but also has emerged as giant economic power of the world. In this pretext, impacts of LPG reforms in Indian economy can be analyzed as follow. Due to economic reforms, growth rate in India has increased significantly. First decade registered growth of 6.5%, while second decade touched 8% of growth rate. According to Economic Survey 2023, GDP growth rate remained at 8.7% in 2021. India is the third largest economy in the world as per the purchasing power parity. In 2021, agricultural export touched the new height of 50 billion mark. Forex Reserve of India with around 600 billion holds fourth rank in world. Accelerated integration of Indian economy with global economy has led to increased inflow of foreign capital. Economic reforms have improved Indian economy in terms of productivity, efficiency and competitiveness, due to which India's participation in global trade is increasing. These reforms have made modernization possible through technological advancement and improvement in management skills. Today, India has emerged as a global giant in field of space IT startups. It is true that economic boom has given a new height to the Indian economy, but the negative impact of economic liberalization can be seen in the form of non-remunerative agricultural, jobless economic growth, rising inequality, increased impacts to capacity capitalism, economic degradation, and exploitation of resources at alarming rate, and ignoring the fundamental right of working class, including others. Therefore, the government should focus on building a comprehensive policy that puts serious efforts towards ending these problems. Question 1D. Discuss the importance of river linking project in Bihar. River linking means interconnecting the channels of two rivers, and its significance in Bihar is much higher because Bihar's geography makes it suffer simultaneously from flood and droughts every year. In 2021, flood-induced damage affected a total of 32 districts, affecting crop production of around Rs 900 crores. Hence, intrastate river linking projects are having great significance in the economic development of Bihar. Some river linking project in Bihar under progress: Bagmati Buri Gandak, Chunar Son, Kosi Mechi, Bagmati Ganga, Gandak Noon, Bayan Ganga. Hence, this river linking project can prove very significant in the development of Bihar in following ways: in flood and drought control. Interlinking rivers to divert the excess water from one river to another river with less water can solve the frequent occurrence of flood and drought. In irrigation, canal and reservoirs development. Excess water can be stored in reservoir to use it later for irrigation purpose in drought-prone regions. Also, existing canal can be desilted to create new ones and to get over the gamble of monsoon. Inland waterway development. Linking river will create new inland water routes, providing transportation facility that will not only reduce traffic on roadways and railways but also reduce pollution and economic costing. In energy security, many hydroelectricity projects can be developed along with interlinking rivers that will meet the increasing electricity demand of Bihar. In employment and tourism development, interlinking river can lead to diverse tourism opportunities like Kosi Safari, Ganga Vilas project, Gayaji Dam etc. that will not only attract tourists and boost our tourism sector but will also provide many employment opportunities in fisheries and aquatic sectors. However, these projects are having big challenges to overcome like huge expenditure and investment, climate change, boundary issues, negative impacts of changing course of rivers etc. Hence, the river linking project are very ambitious project of Bihar that can open new channels in those regions where river water cannot reach like Gaya. It is no doubt an optimistic solution to existing problem of flood and drought as well as in boosting economic growth of Bihar. Question 1E. Write on the main type of unemployment found in Bihar. Also mention the steps taken by the government of Bihar to reduce it. ILO defines employment as a state when a person gets less than 15 hours a job in a week in general. It is defined as a situation when a person is willing to work and able to work but fails to secure a job to ensure his means of livelihood. According to Economic Survey 22, the economic rate unemployment rate in Bihar is 5.1%, which indicates an above average rate of unemployment in Bihar. Type of unemployment: disguised employment, when more people are engaged than actually needed in the agriculture sector in organized sector. Seasonal employment, when a person is unable to get employment in a off season within a 1 year. Rural agriculture sector, ice cream factories workers in urban region. Structural employment, when there is a mismatch between jobs available in market and the skill available of workers. Unemployment due to introduction of high technology based machineries. Cyclical unemployment, when a person does not get job during recession period. Unemployment during COVID-19 economic crisis. Voluntarily in unemployment, when a person gets work at lesser salary as per his degree and skills and they choose to remain unemployment. Behind above type of unemployment found in Bihar, there lie several reasons such as historical policies, rapid population growth, poverty, literacy, lack of skill, and investmental nature calamities. Thus, the government of Bihar is dedicated to reduce these factors and ensure employment opportunity to the nation's third largest population state to reap her demographic dividend benefits. Some of these efforts are mentioned in following charts. Efforts to reduce unemployment in Bihar by government. Steps by central government. Make in India program, Manrega, Mudra loan, Atmanirbhar Bharat mission, DBT provision, PM Ujjwala Yojana, Smile scheme, PM Daksh, New Education Policy 2020. Steps taken by state government, Jivika mission, Sat Nishchay 1 and 2, Bihar Startup Policy 2022, Bihar Skill Development Mission, Mahila Udyami Yojana, SC/ST Udyami Yojana, Fourth Agricultural Roadmap, Jal Jeevan Haryali Mission, Bihar Ethanol Production Promotion Policy, Textile and Leather, Bihar Biofuel Production Promotion Policy, Bihar State Tourism Promotion Mukhyamantri Sam Shakti Yojana. Hence, for any state insured states ensure economic inclusive and sustainable growth. Overcoming the higher rate of unemployment is a prerequisite for which the government has taken laudable measures whose results are visible and witnessed by a drop of 0.1% between 2021 to 2022 from 4.2% to 4.1%. However, the pace is slow, but the dedicated and consistent efforts will surely lead Bihar's unemployment rate to the lowest soon. Question 2. What is fintech? Describe briefly the main component of the development of fintech and also opportunities and challenges related to it. Fintech or financial technology refers to the wide use of internet and communication technology to deliver financial services to customers. Many different sectors and industries are included under fintech such as education, retail banking, fundraising and non-profit work, investment management etc. Fintech received unprecedented growth during COVID-19 pandemic in India. It received investment of more than 30 billion US dollar between 2014 to 2022. Technology is playing an important role in bringing financial inclusion and transparency through their are certain challenges associated with it. Key components for the development of fintech in India. As per the report of Niti Aayog, gig economy in India driven by fintech is contributing to reach the target of 5 trillion economy. The main component of fintech development in India are as follows: innovation in customer acquisition, underwriting, price determination, data storage, and customer services. Favorable macroeconomic population factors and rising middle class with high disposable income, increased reach of mobile more than 1.2 billion and digital based technology, presence of high potential of talent in technology and financial services with rise of service sector in India, availability of equity and investment funds, policy supports increased trust from government to promote digital technology, for example UPI based payment digital India, increased financial inclusion due to schemes like Jan Dhan Aadhaar mobile with more than 50 crore accounts. Opportunities of fintech in India. India with 140 million new household will add 140 million new households to its middle class population and 21 million new households to its high income population by 2030, driving demand and growth in the country's fintech market. As per the estimate of Finance Ministry, Indian fintech market will touch $160 billion market. Rising potential of fintech in India can be analyzed in following ways. Expansion of financial inclusion. Even at present, a large population of the country remains outside the scope of the formal financial system. The challenges associated with financial inclusion in traditional financial and market banking models can be overcome through the use of financial technologies, providing financial assistance to MSME. Low availability of working capital remains the biggest challenges to the survival of micro MSMEs operating in the country at present. According to a report of International Financial Corporation, the gap of capital required and available for the MSME sector is estimated to be approximately $397 billion. In such a situation, the importance of fintech increases in the MSME sector, which also has the potential to overcome the shortage of capital in this sector. With many fintech startups providing easy and quick loans, MSME will be relieved from the hassle of multiple banks visits or complex paperwork. Improve customer experience and transparency. Fintech startups provide important features like convenience, transparency, personalization, and wide reach and ease of use, which help in empowering customer through unique and innovative models to access risks by fintech industry. Women empowerment. Fintech firms help women in addressing the challenges of in-person mobility, access of technology, loss and of uh, employment opportunity, solution of other challenges, using of big data, machine learning, alternative data to access credit risk and developing credit scores for customers with limited credit history will help improve access to financial service in the country. Challenges. In India, fintech adoption rate is 87%, which is above the global average. Fintech is rising at an unprecedented rate, but on the other hand, there are various challenges that exist with respect to adoption and function, which are mentioned in the following chart. Challenges with fintech: innovate, adequate foundation structure, regulatory challenges, investment issues, competition with traditional bank, cyber security. As per the need of the present time, the fintech provides suitable solution to the challenges prevailing in the Indian economy sector. Fintech has the potential to bring about massive changes in of other financial services like insurance, investment, remittance, etc. Therefore, the government is focusing on bringing a comprehensive solution which can address fintech-related security challenges and issues of fraud. So, the fintech can contribute to economic development of India and ensure secured and responsible financial services to the citizen. Question 3. What are the main reasons for the economic and social disparities prevalent in the Bihar? Discuss the initiative measures taken by the government of Bihar for the inclusive and accelerated growth of Bihar. Despite being one of the fastest growing state and having huge opportunity with such huge population, Bihar is considered among one of the least developed states in India based on the various parameters of socio-economic development and the sustainable development goals according to SDG India Index by Niti Aayog. Bihar has occupied the last position among the states with a score of 52, which indicate the prevalence of socio-economic disparities in Bihar. Reason for the socio-economic disparities in Bihar: historical reason, economic reason, socio-economic reason, natural region, administrative and political region. Measures initiative taken by government of Bihar not to ensure inclusive and growth. Some challenges. It is indeed the result of this first of government of Bihar that despite present challenges, Bihar has been growing as one of the fastest developing states in India with positive results of reduced poverty, that is 33.75% as per 2023 Niti Aayog's multi-poverty index report, and Bihar has recorded a compound economic growth of over 10% in the last 5 years. Even it has registered the positive growth rate of 2.5% in 2021 amid COVID-19 pandemic. However, much more efforts are still awaited to get more effective ground result and make Bihar self-reliant and inclusive and sustainably developed state. Some challenges present in this path of achieving socio-economic economic growth in Bihar: proper implementation of policies and schemes, digital infrastructure, rural-urban divide, lack of funds, grants from center, limited technology, higher illiteracy rate, frequent natural calamities, limited growth participation.